Well, hi guys, welcome to this Money Control live stream. It's a Wednesday morning. You're watching Morning Trade with me, Nandita Khemka. The cues coming out of global markets are fairly bleak. Lots of negative news to contend with, given the fact that the Dow has turned negative for the year. Crude prices, even though have come off 3-week lows, but US yields they have hit a fresh 16-year high, and the Nifty, the GIFT Nifty, hinting at a bleak start below that 19,500 mark. So lots of negative cues to digest this morning. Looks like we are in for a rough session today. But of course, over the next 30 minutes, we'll also be talking about all the stocks that will be in focus in today's session. And of course, we'll also be getting all your stock-related queries answered by a technical expert on our show. So if you have any queries, as usual, send them in to us on our YouTube feed and we'll try and take them up. But, before we go any further, let's take a look at the top headlines at this hour. Wall Street ends sharply lower with the Dow turning negative for 2023. Meanwhile, 10-year US bond yield surges to a fresh 16-year high. Stronger than expected jobs data fuels additional rate hike concerns. Meanwhile, Asian markets also open lower on a weak handover from Wall Street. The GIFT Nifty, as I was mentioning, signals a gap down start for the Indian market. Oil prices bear some losses, with the Brent crude coming off a 3-week low to trade around the $91 a barrel mark. In fact, investors are weighing in a stronger US dollar, darkening global economic signals and tightening supply. The 3-day MPC meet gets underway today. The committee is expected to hold interest rates while the stance is likely to remain unchanged. The decision is due on Friday. HDFC Bank announces a major management rejig, appoints new heads for its retail and mortgage businesses, also appoints a new CEO for digital functions. Meanwhile, Abu Dhabi-based IHC has increased its stake in Adani Enterprises to over 5%. And Bajaj Finance will be in focus after its Q2 business update, which is fairly strong, by the looks of it. Well, let me first bring on board our technical expert for today. Well, joining me now is Aamar Deo Singh, Senior Vice President at Angel One. Good morning, Aamar. Not looking very good when it comes to the setup for today. GIFT Nifty below that 19,450 mark. Yesterday, of course, we had a fairly weak session and we've given up all the gains that we saw on Friday. Given that, where would you expect the Nifty to take support, given the fact that it has, of course, even dipped below its 50-day exponential moving average right now?
Yeah, very good morning. So what we've been witnessing in the major indices, including Nifty, is that there is definitely selling pressure which is happening, which we are seeing. And that's across, I would say, most of the heavyweight stocks in the Nifty. That's one. We've seen some sort of solace coming from the IP space, but overall, we've seen some sort of selling pressure coming there. And if you look at the medium-term charts also of Nifty, so I would say that momentum is not there right now. So when the earlier it was that the bulls were having an upper hand from a short-term perspective also, from medium-term perspective also, but that's missing right now. And also if you look at on the open interest data, we see quite many days we're seeing short built up as well. So that's one concern. And also what we are seeing is that the global cues, as you rightly pointed out, and the US markets, they definitely have an impact. And the dollar index strengthening and fears of rate hikes. These are some negative factors which, negative triggers, I would say, which are not letting the market move up, or at least witnessing some sort of consolidation. So we've seen some decent correction in the Indian markets from almost 20,200 levels to currently 19,500 odd levels. So 19,500, that's a very crucial, because earlier also I've spoken about 19,500, 600 being a very crucial support zone. So if that is taken out, then we are headed towards 19,200, 250 zone, because that's going to act as a crucial zone of support. So effectively, it means is that there would be some selling pressure. And also, if you look at the short-term perspective, the trend, or the medium-term perspective, short-term perspective, the trend is clearly down. Medium-term perspective, the trend is, I would say, more or less flat. So that clearly reflects that the bears are gaining some upper hand in the markets.
All right. Yeah, you're right. Bears are gaining upper hand in the markets. We'll have to see, where we open at 9:15 a.m. With that, hold that thought. Aamar, we'll come back and talk about specific stocks with you. But let me also bring on board, Jinesh Joshi, who's the research analyst at Prabhudas Lilladher. Good morning, Jinesh. Great to have you on the show. The World Cup fever has already, gripped the nation. Tomorrow is the day that the World Cup really kicks off. But, I want to shift your focus to all the stocks that stand to benefit from this World Cup frenzy, right? You have the hotel stocks, aviation stocks, or even the QSR stocks, food tech-related companies that stand to benefit. But let me start by asking you about the hotel stocks. Of course, room rates have hit the roof. You have hotels in the smaller cities also booked. And going forward, given the fact that World Cup is also coinciding with the festive season this time around, how much of an upside do you see when it comes to the Q3 earnings season for some of these hotel stocks?
So absolutely correct. I mean, World Cup has come to India after a gap of about 11 years odd. So you will see room rates jack up quite a bit. In fact, if I talk about Chalet in the last quarter, their ARR was about 10,000 odd. And if I talk about Lemon Tree, which is the other name that we cover, the ARR was at about 5,000 odd. Now, given the fact that in this year you had G20 plus in Q3, you will have the festive season come up, which will again coincide with World Cup, which is about to start tomorrow. I think a double-digit rate hikes are something which one can expect, and that will fuel the rally in hotel stocks.
Anything that you like in particular when it comes to Lemon Tree, Indian hotels, Chalet hotels, anything in particular, or do you think all these stocks merit to look at this point of time?
So we cover two names, which is Chalet and Lemon Tree. If I talk specifically about Lemon Tree, which we initiated very recently, they are about to come up with a new 669 room hotel in this month itself. In fact, the opening is lined up perhaps in next week. So that will kind of significantly add up to the earnings of the company. Beyond that, even Chalet, which we cover, we like that name as well. I mean, if you look at the asset operationalization timeline of Chalet as well, they recently launched a 169 room property in Hyderabad, and another one which is lined up in Pune, that is about an 88 room extension. That property will also come up very soon. In fact, OC is awaited for that. Beyond that, they also have some rental assets which will come up for leasing. So I think these are the two companies which will not only stand to benefit because of the World Cup, but they also have new assets come up and contribute to their earnings and EBITDA going forward. So these are the two names that we like in the hotel space.
All right. Let's shift focus to the aviation space. In fact, the transport, space, so to say, given the fact that, Indigo had a fairly good run. But of course, the surge in crude prices did play spoilsport. And, there are concerns over low yields as well when it comes to Indigo in particular. But, riding the World Cup wave, should one, look at some of these stocks now, the likes of Indigo, IRCTC also for that matter. Do you think these merit a look at this juncture?
So Indigo definitely, I mean, in second quarter, the yields will remain under pressure because it is typically a seasonally weak quarter for them. And also, if you look at the ATF prices, sequentially, they are up by about 6-7%. In fact, in the month of September, the ATF prices were at about 113 rupees per liter. So definitely spreads in 2Q will not match up to 1Q, which was perhaps the best ever quarter which they had reported. But nonetheless, for the reasons which I just cited surrounding World Cup and the G20 plus the festive season as well, you will see yields pick up substantially in 3Q. So definitely that should benefit Indigo. As far as IRCTC is concerned, I think majority of the benefits are already priced in. The stock is at about 45 times FY25 EPS. And from here on, I think unless and until you see a substantial jump in the convenience income for the company, which contributes about 70% plus to the overall EBITDA, we may not see a sharp re-rating come through. So I think IRCTC is fairly priced, but Indigo definitely in 3Q should see yields improve and one can look at it.
All right, let's now shift focus to the QSR space. In fact, there was a report-based story in the morning today that, Domino's has slashed, prices of its large-size pizza. and in a bid to take on the likes of Pizzeria and La Pinos and the likes. In fact, I think even Pizza Hut, Yum Brands owned Pizza Hut is pushing on its low price products to kind of boost volumes. QSR space has already been under pressure given the fact that earnings have not been all that great. Inflation has been a headwind, and numbers, the first quarter numbers weren't all that great when it comes to Jubilant Food and the likes. But going forward, do you think World Cup and the festive season would provide a booster, and there could be some pickup at least Q3 onwards, if not Q2?
Sorry, Nandita, I do not cover the space, so it will not be fair on my part to comment on those names. I'm really sorry about that.
All right, no issues. But if I ask you to make a dream team out of all the stocks that you cover, in the aviation as well as hotels space, which ones would you name?
I will pick hotels. The reason being the cycle in the hotel industry is fairly long, and I think we are into the up cycle currently. And even if I exclude the temporary benefits which will come up from a World Cup in 3Q and take a slightly longer term view and look at what the demand supply dynamics are, I think supply is expected to increase in the band of about 4 to 5% over the next 2 to 3 years. Whereas demand growth is expected to be much higher, which means that overall ARRs from here on also have some legs to at least increase in single digits, if not double digits, which what the market is expecting. Even then, I feel that some of the names, especially Lemon Tree and Chalet, they are very nicely placed to benefit from here on, because they will not only benefit from the upcoming festive season and the rate hikes, but also the new assets which are about to come up for, which will kind of help them to increase their overall earnings. So I think hotels is something which has some kind of a stability, and relatively it is less volatile than aviation. I will go with hotels.
All right, hotel best poised to benefit from the frenzy over World Cup, as well as of course the festive season that has in fact kick-started here. With that, Jinesh, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you.
Let's go back to, Aamar then and talk about specific stocks. The stock of the day today should be HDFC Bank, given the fact that they have revamped the top management after mega merger. In fact, Arvind Kaul, who's the group head, will be spearheading the mortgage business. They also have a new CEO for the digital business who will be reporting directly to the, CEO, in fact, Shashidhar. So, given the fact that there will be, there has been, the HDFC Bank stock has been under pressure. The merger overhang will continue for some more quarters going forward. That was, according to some of the brokerage notes that we read over the past few sessions. And, the stock has, of course, come under pressure. Yesterday also it was down somewhere around 1% or thereabouts. Where would you expect the stock to take support now, given the fact that it is just about at that 1500 level right now? Do you expect, the stock to breach that level and perhaps look at 1450, 1400 kind of levels in the coming trading sessions?
Yeah, I would say that looking at the overall structure of HDFC Bank clearly tells me that the stock is not going to rally in a hurry, and there'll be more of selling pressure. Having said that, some of the technical indicators are in oversold territory, and also the stock is somewhere close to very crucial support zone. So that would be around 1470, 1500 zone. So currently it's around 1508. So clearly tells me that that's a level where the stock could witness some temporary respite, and there could be a bounce back. But overall, sustaining is going to be difficult at those levels. So because on the upside, if HDFC bounces back, so it will meet with immediate resistance around 1560, 1600 levels. So that's going to be the level on the upside where the stock would meet with resistance. And also technically looking at the charts, not only from a short term but from a medium term perspective also, clearly tells me that the stock is in for some sort of pressure on the upside the moment it bounces back. So these levels are to be watched out for. 1450, 1470 zone, very strong support zone on the downside, and 1550, 1600 on the upside, with the bears having a current upper hand.
All right, bears have the upper hand when it comes to HDFC Bank. Let's talk about a Bajaj Finance. It has come out with its Q2 update, and of course we also have the board meet coming up on the 5th to consider fundraising plans, right? Now we have some couple brokerage reports coming in on the stock this morning. Morgan Stanley's overweight target price has been raised to 10,300 from 9,500 per share. and it believes that the value and volume growth and customer acquisition has been pretty strong for Bajaj Finance. In fact, Jefferies also has a buy rating, target price of 8,830 rupees per share. And it says that the AUM growth is fairly strong, and the growth in customer base also remains pretty strong on a YY basis. Citi, on the other hand, has a neutral rating. Target price is lower than among the all the other three brokerages, 7,800 per share. It believes that cost ratios may have peaked out when it comes to Bajaj Finance, and it should moderate here on. And it expects ROA and ROE profile to be healthy at 4.7 to 4.7% and 25% respectively. Stock has done fairly okayish in the last 1 month. It has gained 10%. There were concerns over competition, of course, with Jio Financial entering the space as well. But going forward, how much of an upside would you see? 10,300 is the kind of target that one of the brokerages have pegged. Would you also suggest that the stock is headed towards that sometime soon?
Yeah, I would say looking at the charts clearly tells me that the trend for the stock remains extremely strong from a long-term perspective, and one of the technical indicators from a long-term perspective has given a buy. So on the upside, however, if we look on the charts, so what we see is that as recent as I would say July first week, it had tried to breach the 8,000 level, and then going back, we see somewhere in October third week of 2021, it had made a high of 8,050. So clearly that tells me that 8,000 and 8,100, that's going to act as a very crucial resistance zone for the stock. So yeah, if that level is taken out and the stock sustains above that level, which there is a very strong possibility, because what we're seeing is that the recent move which the stock has witnessed over the last few days, that's been on significant volumes. But sometimes volumes can be deceptive as well at highs. So clearly one needs to wait and watch for this level, 8,000, 8,100 level. If that is breached and the stock sustains above that level, then the stock definitely has, because then the stock would be trading at its all-time highs, which it had made in October 2021. So that means that the stock would definitely have a very strong upside potential towards the 8,500, 8,800 levels in the short-term perspective.
All right, 8,500 to 8,600 from a short-term perspective to watch out for on Bajaj Finance. Let's talk about Maruti now, Amar. Given the fact that the stock has hit a speed bump after it clocked a 52-week high of 10,700 or thereabouts. It has been under pressure over the last 1 month. Also, the returns have been negative. And this morning we have negative news that the company has received draft assessment order from the income tax authority pertaining to FY20 worth 2,160 crore rupees or thereabouts. Sales were also in sales growth was also in single digits. We had the sales data coming in recently, and as I was mentioning, that the stock has hit a fresh speed bump after hitting a fresh 52-week high. So here on, do you expect the stock to defend that 10,000 level, or do you think it will be taken out in the next few sessions?
Yeah, I would say that the stock, if you look at Maruti from a long-term perspective, the trend definitely remains positive. From a short-term perspective, we've seen some sort of consolidation happening after, I would say, the first week of September. So the stock has gone in for consolidation, and as you rightly said, we saw some sharp correction in the stock yesterday. On the downside, yes, somewhere around 10,000, 10,100, that's an immediate zone of support for the stock, because from a medium-term perspective also, 10,000, 10,100 should act as a zone of support where the stock is likely to bounce back from. But again, on the upside, having said that, I would say the stock now seems to be caught in a trading zone. The trending move which the stock had witnessed earlier, that seems to be over from a short-term perspective for sure. So on the downside, it's going to be 10,000, 10,100 on the downside, and 10,500, I would say 500, 600 on the upside. So that's the range where Maruti is likely to trade, but the long-term indicators are still very strong and positive for the stock.
All right, long-term indicators remain positive for Maruti, but let's take up some viewer queries on that note. Amar, the first one is coming in from Maheshwar Bhanu, wants to know your thoughts on GNFC. He wants to know if this is a buy at current levels for the medium to long term. The stock has been fairly choppy. Over the last 1 month, it has given negative returns to the tune of 4% or thereabouts. But 6 months, if you look at the stock on a 6-month basis, a good double-digit 15.5% kind of returns. Would you say it's a good time to buy this stock on every dip?
I would say that currently the stock is, if you ask me, currently the stock is in for a sideways consolidation. So that clearly tells me that it is better to avoid right now, because the stock is on the medium-term charts as well as the long-term charts, the stock is clearly displaying signs of consolidation.
All right, that's the view then. But let's take up another query then. This one is coming in on BEL, Bharti Electronics. Vivek Kurup wants to know, he has he holds shares at the rate of 145 rupees per share. He wants to know what target he should keep in mind for the next 15 to 20 days going forward. What are the kind of levels you'll be watching out for there, Amar?
Yeah, I would say that this stock is currently on the short-term perspective clearly in a consolidation phase. So I would say a 130 on the downside, 145 on the upside. That's a range for the stock. A long-term trend continues to remain positive. So at the current levels, the stock is clearly in for a consolidation. So because most of the technical indicators from a short-term perspective, they point towards consolidation, and it could be a range trade. So till the time the stock does not sustain above the 145 mark, I would say the stock could witness some selling pressure towards 128, 130 on the downside.
All right, that's the view on BEL. Hope that answers your query. We have a query coming in on IDFC First as well. Siddharth Jain wants to know, given the fact that, of course, the company will be launching its QIP to raise 3,000 crores, he wants to know where will the stock head in the session today. Stock has been fairly flattish over the last 5 sessions. I think it has just about gained 0.2% or thereabouts. Would you expect a lot of action on the stock today, given the fact that we have the QIP news?
Yeah, I would say that that news could have an impact on the stock from an intraday perspective. But overall, if you ask me, from a long-term perspective, the stock is definitely a buy. There's no doubt about it. So effectively, it means is that any significant correction in the stock should be used as a buying opportunity, but from a long-term perspective. However, from a short-term trading perspective, the stock is clearly in a I would say no man's land, meaning it's completely a range play. So on the downside, somewhere around 88.90, that's a zone of support. On the upside, it's around 9800. So it's clearly a range play for the stock with no fresh triggers as of now, technically. So as I said, the news could have some impact, but sustaining above 100 immediately in the short term does not look that likely.
All right, that's the view on IDFC First. But we have a query coming in from Omkar Toshniwal, wants to know your thoughts on Metro Brands. Of course, yesterday the stock was a high flyer, up somewhere around 10% or thereabouts. What is the kind of strategy one should adopt on this stock? Should one nibble into it right now? And if one is already holding it, should one book partial profits, or how should one go about it?
Yeah, this is one stock, if you look at, it was in for consolidation for, I would say, fairly long period of time, starting from, I would say, second week of July. And yesterday, the stock witnessed a sharp up move, almost more than 20%, and that also on significant heavy volumes. So clearly that tells that there's something definitely happening in the stock and the company, because the stock is trading at its record highs. So that also clearly points out that the overall structure, both the fundamental as well as the technical structure of the stock continues to remain strong and firm. But post a sharp rally of 12%, buying at the current levels, I wouldn't suggest. Those who are long, they can definitely hold on to their position, because the stock has witnessed significant upside move on huge volumes yesterday. So fresh entry wouldn't be recommended. But yeah, those who are long, they should definitely hold on to their position. If they want to trail the stop loss, then the stop loss needs to be below the 1100.
All right, hold is the call on Metro Brands, and a fresh entry is not warranted at this juncture. But let me take up the last query for today. This one is coming in from Pankaj Kajalia, wants to know your thoughts on Bharti now. The stock is near about its 52-week highs, and over the last 1 month, it has gained somewhere around 7% or thereabouts. Do you expect the stock to touch that 1,000 mark sometime soon now?
I won't say that it's going to touch, likely to touch the 1,000 mark very soon, but from a long-term perspective, the stock remains firm. So effectively, it means is that this is again one stock on any significant correction. This is a buying opportunity. On the downside, the stock has got support coming around the 900 mark, whereas on the upside, the recent high which the stock had made on 15th of September, so somewhere around 950 odd, that would be a level of resistance. But the stock is positive across all different time frames, so that's a positive thing for the stock. So it could wait for some trigger, but overall the stock remains positive. So if one is long, one can hold on to the stock. Only above 950 sustained, trading above 950, you could expect the stock to witness another rally towards the 990,000 mark.
All right, that's the view on Bharti. Hope that answers your query. But with that, we've come to the end of the query segment. But Aamar, before I let you go, any recommendations for viewers this morning?
I would say LIC Housing is one. LIC Housing Finance is one stock. Again, this is very strong on the charts, be it the medium term, long term charts. Short term, we've seen a breakout for the stock. So this is one stock one can definitely look at. So any pullback towards 470 can be used as a buying opportunity with a stop loss of 457 and a target of 497 in the short term. And the second stock to look at from a trading perspective is IRCTC. This is one stock. We've seen a lot of consolidation. The stock made a record high in December 2021. Post that, the stock hasn't really rallied that much, but we've seen some sort of up move over the last few days. So this is one stock one can look at. So again, any pullback towards 695, 700 can be used as a buying opportunity with a target of 735 and a stop loss of 673 on the downside.
Right, that's those are the stock recommendations coming in from Aamar. But Aamar, before I let you go, I want to just get your thoughts on Avenue Supermarts, given the fact that it has come out with its Q2 update. And the stock hasn't done much over the last 1 month. In fact, earnings haven't been all that great for the company in the last quarter as well. So going forward, Avenue Supermarts, how is it looking on the charts?
Yeah, I would say if you ask me on the charts, the stock is clearly in for consolidation, because till the time we don't see the stock sustaining above the 4,000 mark, because that's a zone where the stock has been trying to breach but not able to sustain above that level. If you ask me technically on the long-term charts, the stock is not going anywhere. That clearly shows. So it would be more or less a range play for the stock. On the downside, somewhere around 3,500. On the upside, 4,000. That's a range. And that's what is coming out from the long-term charts as well.
All right, 3,500 to 4,000 is the range to watch out for when it comes to Avenue Supermarts. With that, Aamar, thanks a lot for taking out time and joining in. And of course, we have completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. Stay tuned to Money Control, because coming up next is Opening Bell from me and the entire team. Have a great trading day.